More details on what the revenue figures are. The revenues at this point have come in at 2621 crores. So that as well is slightly below the 2694 crores that the street was estimating. It's still a growth of around 13% or so, but below expectations. On the operating margin front, remember the problem for TVS Motor and the reason why it trades at a discount to many of its peers is that despite having a good revenue profile, it has never been able to get above that 6 to 6.5% margin range because it just does not have the pricing power. And that's the reason it trades at a discount to some of its peers. And now as well, Anuj, if you look at the internals, yes, there is about a 13% growth on the top line. The bottom line as well has grown about 30-odd%. But I fear that, it has been stuck in this margin range that it has not been able to get out of, and it looks like this time could be the same.
Yes, and Sonia, that point is important, and of course you track the stock more than me, but despite the total income beating estimate, the net profit has fallen short of estimate by a good 10%. Yes. That's not a small miss on net profit. The net profit miss, according to your poll, is a good 10%, and that's because of this big margin miss. For longest you've been hearing, what if TVS Motors increases market, its operating margin by 1 or 2%? Yes. Look at the kind of EPS it will generate. But the margin is falling in this case. So obviously the incremental market share gain is coming at the cost of margin, it looks like.
That's absolutely, Anuj, and that's the reason the stock has not performed at all this year. Yes. In fact, it's down 1% for the year purely because it hasn't been able to, it has some great products in its portfolio. It has the new scooters, the Vego, the Jupiter. It has a couple of new motorcycles like the Apache, the refreshed version of Star City, but it just doesn't have the pricing power. Yes. And the EBITDA, by the way, just to update our viewers, has come in at 163.8 crores, which is much below the 180 crores that the street was estimating, and the margins have come in at 6.2%. Remember, as I was mentioning, all through FY15, it was stuck in this margin of 6 to 6.2%, and at the start of FY16 as well, there's been no ability to bump up the margins. But now 2 out of 3 two-wheelers are have reported disappointing numbers.
Yes, and in any case, we don't have high expectations from Hero, right?
No. Because rural demand has slowed down. So,
yes. And I think on TVS, your point is taken, because at the end of the day, they would not have pricing power. If anyone wants to buy a bike, they'll think of Bajaj or Hero, because TVS offers them a better value at a better price, so they would opt for TVS. Same is the case with scooter. You don't want to buy an Activa because TVS is maybe offering you a slightly cheaper version and same value. So that's why maybe you've seen this kind of impact on margins.
But it's even more disappointing for a TVS investor, because if you look at their market share, it's actually gone up. Yeah. So in FY15, the market share in the scooter segment went up about 250 basis points to 15.2. So they are getting more of the market pie, but they're not able to price their products more aggressively because they fear that they might lose out on market share. And when we spoke to the management repeatedly, they have said that we're going to focus more on market share rather than margins.
Sonia, I'll stop you on that, because